The National Australia Bank and Westpac, well, they both jacked up their mortgage rates and some of their savings rates within a couple of hours of the Reserve Bank decision to raise that cash rate by 0.25%. So it makes it inevitable that other lenders will also follow. Joining me, Sally Tyndall, Research Director at financial monitoring company Rate City. Sally, always good to chat to you on these days. So just explain what the banks have done, those that have already moved that we've seen.
OK, well, today's full of surprises for a start. The RBA hiked by 0.25% when most of us were expecting 0.5%. Then the second surprise is the banks came out quickly. NAB fired off their announcement pretty quickly. They're passing it on in full to their variable customers, but it really was only a half an announcement, Ross. They've said nothing on their savings accounts. Westpac have followed suit quite quickly through, passing on the full hike to their variable mortgage customers, but they have stumped up some savings announcements, and they're not a bad effort from Westpac here. We've got Westpac Life going up by 0.25%, their rate, the ongoing rate there, 2.6%. Westpac Spend and Save account, that's the one for young Australians aged 18 to 29. That's going to 3.5%, I think. eSave, they are only hiking the intro rate on that account. It's disappointing there. It's going up by 0.25%, but only for new customers, only for the first 5 months. Their ongoing rate for that account, still 0.85%.
So there you go. There's the big issue. OK, let's go back to mortgages, because the idea of the Reserve Bank raising rates so rapidly was to really take, if you like, some of the impetus out of the spending of Australians to quell inflation. The cumulative effect of these rate rises is now starting to add up for borrowers.
Yep.
And so even for a $500,000, $750,000 or $1 million loan, it works out being thousands or tens of thousands of dollars per year. That's the key here, isn't it?
Absolutely. These rate hikes are really starting to pile up. The problem is, and the concern, not just from the RBA, but also, for each individual borrower, is that there's a 2 to 3 month lag between when the RBA hikes the cash rate and when that actual money comes out of your bank account. And so some borrowers may think that they've conquered 5 rate hikes and they are in a good position to take them on the chin, take the 6th one on the chin. But in actual fact, they've probably only seen the full effects of the last 3 rate hikes. There's 3 more to follow. Yeah,
I think we've got some graphics here, and you can see the impact here, and that is, the 0.25% rate rise here. Sort of for somebody with a pretty typical loan, 750,000 loans is $110 a month. Now, the problem is there's been 10 of those. So that means, you're now talking $1,100, you're talking $12,000 a year after tax for that family, $750,000. If they're typical in terms of income, $90,000 a year, that is a big wedge of money coming out of the savings, right?
It's a huge bucks to pay for the average family, but you've got to add on top of that the soaring cost of living, petrol prices on the way
That's
back
right.
up.
And there's the cumulative effect. So this shows you all of the rate rises over that period, and you put this together. So there you go, that $750,000 loan, $1,030
every single month.
Every single month. So that's $12,000. There's $12,000 after tax that you can see.
Correct.
And as I say, in your major capital cities, that's not an enormous one. Even a $500,000 loan there, the best part of $700, well, that's pretty simple maths, $8,000. All right?
It's going to hurt a lot of families.
And that's a first home buyer. Think about that, $8,000 a year for a first home buyer after tax.
And one of the key concerns here is that first home buyers that got into the market recently, before November of last year, were stress tested by the banks at 2.5%.
Yes.
Well, rates have gone up 2.5%.
Just one small thing for you, very quickly. Is there much difference between the highest lender and the lowest lender in the market today? Is there much negotiability there now?
Oh, absolutely. There's huge difference. Existing customers have always got the raw end of the deal, let's be clear here, but that gap is, I think, starting to widen because we're seeing more and more banks put on new customer discounts. 33 banks on our database have cut rates for new customers since the RBA started hiking in May. That's making a serious impact. We looked at someone who took out a loan 2 years ago with a Big Four bank on one of their lowest rate loans. They are paying 0.67% more than what the bank is offering new customers today. Put that on a $500,000 mortgage, that translates to $190 extra in monthly repayments.
Sally Tyndall, always good to have in the program from Rate City.